Welcome, everybody. Good evening, and welcome to the University of Manitoba's Homecoming 2023. My name is Vicki Verge, and I am a proud member of the University of Manitoba's Alumni Association. Before we begin, I'd like to acknowledge the University of Manitoba campuses and share our land acknowledgement. So the University of Manitoba campuses are located on the original lands of the Anishinaabe, Cree, Oji-Cree, Dakota, and Dene peoples, and on the homeland of the Métis Nation. We respect the treaties that were made on these territories. We acknowledge the harms and mistakes of the past, and we dedicate ourselves to move forward in partnership with Indigenous communities in the spirit of reconciliation and collaboration. As alumni, we play a critical role in supporting the treaties and the Truth and Reconciliation in our lifetime and lifelong connection with the University of Manitoba, and are committed to continually learning and doing our part to share in the process of reconciliation. So thank you so much for joining us today and making this event a part of your day. I'm delighted to introduce your presenter, Mr. Tim St. Vincent, a University of Manitoba extended education grad from the class of 2003 and 1995. Tim is the Credit Counselling Society's financial educator for Manitoba and the GTA, and he is based out of Winnipeg. Tim has over 30 years of experience in financial services and is a retired certified financial planner. Tim believes strongly in the power of education, planning, and acting on your plan. Through his work with the Credit Counselling Society, Tim has helped numerous people, including students and recent graduates, access the support and information that they need to take control of their financial situations, understand credit score, and manage their debt. So thank you very much, Tim. Now over to you.
Okay, well, thank you very much, Vicki. First off, as we go throughout the session today, if you run into any technical challenges or anything, please, let us know and communicate that to us. I want to thank the Alumni Association for helping put all this together, and Vicki, who's going to be hiding in the background and keeping me honest and make sure I stay on track with my questions. There we go. There's Vicki. Please ask your questions as they come to you. We just ask that you use the chat function for that, and Vicki will be helping me stay on top of those questions. I also want to thank Chris and Dara, who are sitting in the background as well, who helped organize this and help us to manage this and make sure it's a nice, smooth process. So Vicki did a good job of giving you a bit of a background on me. I just want to tell you very briefly a little bit about Credit Counselling Society so you can understand our perspective on things. We're a nonprofit organization. We provide coast-to-coast coverage, and really what we're all about is helping people understand how our financial system works. It's not as easy and clear-cut as you may think. It can actually be quite confusing and a little daunting at times. So on the education side, we hope we can give you a good solid foundation. Our audience is really anyone and everyone, from the person who might be struggling at the end of the day and needs the help of the food banks to get by, to the professionals making well over $300,000 a year and more. It's really important to understand that a good education and a good income isn't a barrier to having financial challenges. As I often have to remind people, even millionaires go broke. So income and education isn't necessarily a barrier to having these types of challenges. So we really want to hope we can give people a solid foundation so they don't have those challenges. We realize that's a little optimistic on our end. So that's why we have the second half of Credit Counselling, where we help the people with free budget reviews and budget preparation, credit counseling, credit reviews, and things of that nature. And that's all for free. For people who have maybe a slightly different need than that, we have something called a debt management program, where we'll go out and talk to your lenders on your behalf and work with them to bring the interest rates down towards zero. We've been around for about 27 years now. Over 1 million Canadians have come to us for help. So again, if you're having any challenges, I want to really reiterate, you're not alone. A significant portion of the country is facing challenges. We put over 160,000 people through our workshops, webinars, and certificate programs. And of those who have gone into the debt management program I was talking about, we've helped them repay over $750 million worth of debt. So again, there are a lot of people out there who are struggling. So if you're having any challenges, you are definitely not alone. So that's it for my preamble. We're going to try and keep this session as lively and engaging as we can possibly can, and to keep it as interactive as we can. So I will be asking you guys some questions as we go throughout. And you can use your chat function to respond. And again, Vicky will help me stay on top of that. We got a lot of information to cover here. This is sometimes a half day, 3-hour workshop. We've compressed into about an hour for you, but I think we can really cover the core material in an hour. We're going to talk about credit wellness. How are we doing as a nation in terms of dealing with our credit? We'll talk about what is credit and how do we use it. We'll talk about cost of credit, also referred to as the cost of borrowing, which is really interest rates. Some credit traps, some marketing techniques that are sometimes used to help draw us in and get us to spend perhaps unwisely. We'll talk about the importance of your credit history. We'll talk about credit reports, credit ratings, credit scores. Oh my, we've got so much to cover. We'll talk about the oddities of credit, and there are some peculiarities in there. And we'll talk about, improving your credit. It doesn't necessarily have to be all that daunting. So let's start off with credit wellness. How are we doing as a nation in terms of dealing with our credit? Well, 29% of those with high debt suffer from severe anxiety. Unfortunately, 72% of us say we're very concerned about our finances. So there are a lot of very, very anxious people out there focusing on their debt and being very concerned with what they're doing and the amounts they're carrying. 35% of Canadians struggle to pay their bills at the end of the month. I'm only on my second bullet here, and already over a third of the country is struggling financially. 40% of Canadians don't pay off their credit card bill at the end of their billing cycle simply because they can't afford to do so. 45% of employed Canadians find their debt level to be overwhelming. That's a very strong word. It means they can't get away with it. It's always weighing them down. It's always on their mind. It's a constant part of their thought process. When you combine that 29% of suffer from severe anxiety, 72% of us are worrying about our finances, and 45% of us are feeling overwhelmed, over time, that has a very significant impact on your mental health, on your sleep patterns, and on your physical health. So there's more going on here than just simply worrying about this. It has a much greater impact than that. 44% of working Canadians would find it hard to meet their financial obligations, pay their bills, if their pay was delayed just 1 week. Reworking that a bit, that's like saying almost half the country is 1 week away from being broke. 50% of Canadians come out and say it point blank, hey, I am living paycheck to paycheck, and 50% of us have no budget. I don't see that as being a coincidence. I really believe if half of us who do not have that budget had that budget, all those stats we went through would be much better than what they currently are. In 1980, the average Canadian household to debt income ratio was 66%. Today, it's at 183%. So how are we doing as a nation in terms of how we manage our credit and our debt? Well, not so good. Not so good at all. And I want to emphasize here that our financial institutions are sound, they're solid, they're amongst the best in the world. If you remember the market crisis of 2008, 2009, when the world was having some significant financial challenges focused on the financial industry, the Canadian banks were being upheld as a model because, yes, we had our challenges, but they were not nearly as significant as what the rest of the world was encountering. So our institutions are great. All these numbers you're seeing our result is what we are doing to ourselves as individuals in terms of how we manage our credit and debt. And part of that comes from, quite honestly, we don't learn how to manage credit and debt correctly. We don't even really learn what it is and how it works. I mean, a little bit more about my background. I'm a retired CFP, a retired certified financial planner. I taught the financial planning program for several years. I have my Canadian securities. I was in the industry for about 25 years before I joined Credit Counselling Society. The things I learned about debt in the first 2 weeks I couldn't believe. About 90% of what we're going to cover today, I did not know. I was born into this financial system. I taught this financial system. I was a financial planner. Yet 90% of this I didn't know because we, as a financial planner, we're taught wealth accumulation. If you have money, how to make more money. Great. Tax minimization, how to keep the money you just made in your hands and not in the hands of the government. Great. Debt management, how to handle your credit, not touched. And I think that's why so many of us are having challenges. So again, if you're having challenges, you are not alone. So we got a nice sized crowd tonight. It's 18. That's a nice home crowd. It's easy to work with. So I got a question for you guys. I want you to open up your chat fingers and get ready to chat out an answer here. If credit is such an integral part of our lives, and it is, we just cannot manage without it. I can't pull 300,000, 400,000 out of my back pocket to buy a house. I need credit. So what is credit? How would you define credit? So chat out some answers to me. Give me some quick little answers. How would you define credit? And don't worry, no such thing as a wrong answer. What does credit mean to you? And
Well,
I have
Tim,
40.
well,
Go
yeah,
ahead.
while people are warming up, I'm going to say credit cards. I see a loan, time traveling, money from the future to be used in the present.
Perfect, right? Perfect. Yeah, I got a couple popping up here. I see it as a loan that you get and you have to pay back. Perfectly fine. Time traveling. I like this one. Money from the future to the present. I love that. I haven't heard that one before. That one's awesome. That was from Brendan, I think. That was awesome. And an advance. It's great, you know. A typical definition, a more technical definition, is something like usually borrowing money from a third party, typically a financial institution, with the intent to pay it back at a future date with a set interest rate, set amortization table, and a repayment schedule. Wow, that's a long, boring definition, right? Who the heck is going to remember that except maybe some geek like me? So I got a much easier definition for you. Credit's like a drug, because like a drug, it can be very, very easy to get. Like a drug, it can be highly, highly addictive. Also, like a drug, if used correctly, the way it is intended to be used, it can be very, very helpful to you and very, very healthy for you. Unfortunately, though, also like a drug, if it's used in ways it was never intended to be used, if it is abused, it can drag you down into a dark, dark place so fast you'll have no idea how you got there. So, credit is like a drug. In and of itself, it is neither good nor bad. It's all about how you use it. But it's not just any type of drug, it's a very particular drug. It's opium, also sometimes called other people's money, OPM. Now, that sounds a little funny, it sounds a little cute, but the credit products are getting more and more sophisticated and confusing. And sometimes you're not sure if you're using credit or not. So ask yourself, if you're ever uncertain, am I a user? Am I using opium? Am I using other people's money? And if the answer is yes, well, then you're using credit. But just because credit is like a drug, neither good nor bad, it's all about how you use it, that doesn't mean that you get to blame the pharmacist. You don't get to blame the provider of credit, right? Think of it this way: you hurt your back, you get a prescription for some painkillers, you go to the pharmacist, you get your prescription filled, they give you the drugs. If you use it correctly, it is beneficial and it will help you. If you abuse it, if you use it in ways it's not intended to be used, you can become addicted to it and it can be very, very damaging. If you don't use the drugs correctly, well, nobody ever goes back and blames the pharmacist because the pharmacists did their role in our society. They gave us access to the medicine. It's then up to us to learn how to use the medicine correctly. Well, credit's the same way. I will grant you that sometimes the providers of credit can be a little aggressive in how they provide access to it. But at the end of the day, it's our decision in terms of how we use it. In a way, it's like Alcoholics Anonymous. If you go around and blaming everyone for the problems you're having, the providers of credit, you're never going to get better. You're not going to learn how to use it correctly. So we have to accept that if we made bad decisions, we've made those decisions. And you can't go around blaming the provider of credit. That's not going to help you. You have to learn where and how you made those bad decisions. And quite often it's simply because you didn't understand how credit works. Because how does credit really work in this country? Hey, you're 18, congratulations, have a credit card, right? If you're new to the country, hey, congratulations, welcome to Canada, have a credit card. And that's our introduction to credit. And we never really learn how to use it. So hopefully we can correct that a little bit today, and we'll look a little bit deeper into it. Now, normally I go through a whole list of different ways that credit kind of pops up into our lives, and we're a little time constraint tonight, so I'm only going to pick on a couple of ways here. My goal really is for everyone to be like Harvey, right? And, I want everyone to go kind of, aw, because Harvey's cute, right? So, aw, really, I want you to be a credit aware consumer. That's what Harvey is, because he's got this credit offer in front of him and he can see this nice, tasty little bit of cheese, and he knows it can be healthy for him and he knows it can be very good for him. But he's a credit aware consumer. He also understands it can be a bit of a trap. If he doesn't understand how to access it, if he doesn't understand how to use it, it can quickly turn from something good and nutritious to something that can be very, very dangerous. So I want everyone to be like Harvey. All right, so the ones we're going to talk about tonight, we're going to talk about a typical credit card pattern, making minimum payments, the dangers within that. And we'll talk a little bit too about payday loans. And payday loans are insidious, and everyone is a target for this. You see them more prevalently in lower income, but high income individuals use them as well. Doctors, lawyers, accountants, professionals. So it's really important we understand how these work. So first, let's take a quick look at credit cards, right? And quite often people run into a minimum mindset challenge where they want to make just the minimum monthly payments because that's small and it's affordable. So let's look at an example. One, I'll pick on fitness equipment. It's sort of like the cliche commercial you see at 2 in the morning. If you guys know Bowflex, they do fitness equipment, or Nautilus, but just think fitness equipment, Peloton. You see these commercials pop up at 2 in the morning and they say, buy our fitness equipment, for as little as $60 a month. And I'm just pulling that number out of the air. For as little as $60 a month, you can get all this equipment and have a body like this, right? That's how those commercials tend to run. So let's say you just saw that ad and they're saying for as little as $60 a month, and they hammer this into you over and over again, $60 a month, $60 a month, $60 a month. Pretty soon that's all your brain absorbs. And you think, hey, I can get all this great stuff for just $60, right? This is a deal. I'm going to have to do that. Well, that $60 a month is a minimum payment. So let's translate that into a standard credit card. Minimum payment is usually about 2% of the outstanding balance. Standard credit card interest rates usually around 19.9%. Doing the math, which I won't make you do, that means you're carrying a balance of $3,000. So most people are going to say, hey, that's $60 a month. I can do that. I'm just going to make that minimum monthly payment, So I got a question for you guys. Get those chat fingers ready to go again. What do you think? If you're carrying a balance of $3,000 on your credit card at a 19.9% interest, making that minimum monthly payment of just $60 a month, how long do you think it's going to take you to pay off that credit card? We'll see if we have any finance people in the crowd and they're going to quickly pull out their calculator. Just give me a guess. What do you think it would be?
Feel like we should have the Jeopardy music on in the background.
Whoa, that would be great. I'm going to have to try that next time.
Yeah.
So I have like 40 minutes, guys. I can wait. Someone be brave. What do you think? How long do you think it would take to pay that off? I don't think anybody's going to be brave. Okay, well, I will keep going. If anybody wants to guess while I'm talking, you can keep on going, because I'm going to tell you that it's actually going to take you about 53 years to pay off that $3,000. I mean, wow, you're going to be dead before you finish paying this thing off, right? I mean, you'll look really, really good because you've been using it for 53 years. It's not like you're going to use it to hang your laundry on because nobody ever does that. And over the course of that 53 years, you're going to be spending about $13,000 in interest. So that original purchase thing where they just want you to think $60 a month is going to end up costing you almost $16,000, right? And wow, right? If that isn't scary enough, about a third of the country right now is making the minimum payment or less on their credit cards and their lines of credit. I mean, look at the impact of doing that. Now let's go back to the mantra of credit is neither good nor bad. It's all about how you use it. This is obviously not the right way to use it. So let's look at a better scenario. We're going to keep it as a $3,000 balance. It's still 19.9% interest. But instead of making that minimum monthly payment of $60 a month, I'm going to increase it by $40, just an extra $40 a month. By adding that $40 a month in, it's going to take the time to repay it and drop it from about 53 years down to 3.5 years. Just $40 a month is knocking off almost 50 years of payments. Instead of almost $13,000 in interest, it's now just a little over $1,100 in interest, and a total purchase price, instead of being almost $16,000, is just a little over $4,000. That is because when you make your minimum payment on something, traditionally, depends on what type of credit you've acquired, but traditionally the majority of it, like in a credit card, we'll say 95% of it goes to interest. Only about 5% goes to reduce the principal amount borrowed. So it takes forever to pay it off, and they get to charge you a ton of interest. So they love it when you make a minimum payment. Please do not do this. I mean, and you can take this concept, the math is a little bit different, and you can apply it to mortgages, you can apply it to car loans. Always try and make more than that minimum monthly payment. Sometimes life happens and it's all you can manage, and that's understandable. But if you buy something with the expectation of making just the minimum monthly payments, you can't afford it. Nobody can. I mean, look at the interest, how it piles up and accumulates. Look at that cost. Look at how long it's going to take you to pay it off. And this is a very dangerous mindset where they like to get people into that minimum monthly scheme of things because they are going to make a lot of money on interest. But if you just put in that little bit extra, right, and you understand how credit works, you can take away that power, right? If you're collecting compounding interest, that is awesome. If you're paying compounding interest, that can be devastating. So please keep that in mind when you're looking at any type of payment schedule. So now let's go to, in some ways, to the opposite end of the spectrum. And yes, I'm going to ask you a question on this one too. So hopefully we get you guys to feel a little bit braver and get some responses this time around. So payday loans, briefly, historically, they were smaller loans. They used to be around $1,500. Now you can get them $30,000 to $50,000. It's kind of scary. They're called a payday loan because they're due on your next payday. They work in a 2-week cycle. The majority of the people, not everyone, but the majority get paid on a 2-week cycle. So it's called a payday loan because you have to pay it back in 2 weeks on the next payday. There's no credit check, right? So how do you qualify for a payday loan? Well, ask yourself this question. Are you breathing? If you're breathing, well, that's pretty much all it takes. You need a source of income with regular deposits into your banking account, and you need to have had no more than 3 rejected payments in a 12-month period. If you can pass that very strenuous test, congratulations, you just qualified for a payday loan. And as I mentioned, don't think it's just people in low income areas, though they are more highly targeted. I did some consulting work very briefly for a payday loan company, and you would see doctors, lawyers, professionals, people making 5, 6, 7, 800,000 a year or more going to payday loans. Now, typically, a lot of these people had abuse issues, gambling or substance abuse, but they still went to payday loans. So well-educated people tap into these as well. So how do they work? How do they market? How do they advertise? Well, let's pretend I'm a payday loan organization. How do I advertise to you? Well, I'll start off with like, hey, I'm a great guy. Tell you what, get a payday loan for me, and I'll just charge you $17 per hundred. And they'll hammer that into you over and over and over again. $17 per hundred, $17 per hundred, $17, $17, $17. So like the minimum payment example, pretty soon your brain absorbs $17 and goes, hey, that's pretty cheap. That's only going to cost me $17. I'm going to get this. Well, you have to pay back the principal too. So you don't pay them $17. You of course have to pay them 100. and $17. So that's good marketing trick number one. Let's look at good marketing trick number two. And let's do a quick little look at this. Let's say you get a line of credit. Maybe you can get that for, 6%. Credit card, 19.9%. Bank overdraft, 21%. Department store cards, 29.9%. Payday loans, $17 per 100. Well, that's a little different. They've broken the pattern. So I'm going to ask you guys a question. Get ready. Here comes the question. Let's see if I can get some answers this time. If I'm getting a payday loan and I'm paying $17 per 100, what's my interest rate on that? What's 17 out of 100? Let's see if I got some brave souls today. I don't ever, if I scared you all,
I think you
you're
have a quiet crowd tonight.
it is a quiet crowd.
They're just listening.
Well, I'll tell you what, most people would say, well, 17 out of 100, that's easy, right? That's 17%.
That's
Yeah,
what we
right,
thought. Yeah.
right. Absolutely wrong. Completely, totally, and utterly wrong. But don't feel bad if that's what you were thinking, because 90%, there, I got a brave answer. Thank you for that brave answer. Because 90% of the people out there would make that mistake. If you got 17 out of 100 on a history test, you should have studied a little longer. That's 17%. We're talking about money, and the math is a little bit different, right? They really want you to be going and thinking, hey, that's 17%. Why do people so down on payday loans? My credit card's charging me 20%, right? Payday loans only 17%. Why are they dumping on payday loans? Well, what you're thinking of as 17%, that's a simple interest rate. That's not how interest is really expressed. You have to think of that 17%. Well, you're paying that over 14 days. But this little symbol here that you see, that stands for APR, or annual percentage rate. That's how you calculate interest, based on 365 days, not on 14 days. So you have to take that $17 you're thinking it is at 17% over 14 days and stretch it up to 365 days. Don't worry, I won't make you do the math. I've got that one all lined up for you. When you do math, you'll get the real interest rate on a payday loan on the province of Manitoba, and it is a whopping 442%. And yes, that is legal. But they want you to think it's only going to cost me $17. How do most people pay back a payday loan? With another form of credit, either another payday loan, a line of credit, they'll borrow some money from someplace else, and then they get caught into the cycle of debt, which is very, very difficult to break out of. So please, please do your best to never engage in a payday loan. This is the one time it's hard for me to say credit's neither good nor bad. It's all about how you use it. There is a good way to use a payday loan. You use it once, you use it only once, you pay it back in full within that 14 days, you walk away and you never go back. Unfortunately, that's very rare that happens. And that's why payday loans are all over the place. They're very profitable. They do take on a much higher risk, but it is an absurd interest rate that they charge. And thank you for the, oh wow, I have one person out there who's engaging with me. I want to encourage the rest of you. I don't bite, I promise. So yeah, it's important that we understand how these products work. And I've just kind of given you two ends of the spectrum. There's so many other ones I'd like to talk to you about, but I'm doing my best to stay within my hour time limit. But just be aware, ask questions, make sure you understand how the interest rate calculations are done, and ask them very specifically. I mean, on a payday loan, they do have to disclose when you sign the contract that the true cost of borrowing is 442%. So they do disclose that to you. But typically by then it's too late. You run out of options and you go, what the heck, I'll take it. I'll find some way to pay it off. And typically it is paid off with another form of credit. And that's a nasty pattern to get into. So let's talk about credit. And excuse me for just half a second. I got to flip on a light here. I forgot to do that before we got started. So there we go. I just needed that little bit of extra light in there. So let's talk about your credit report, because that's obviously a key component of everything we're getting into. So a credit report is a document that contains your credit history. Sometimes your credit report, your credit file, and your credit history, those are terms that are used interchangeably. Your credit history is really just a text detailing your use of credit. It's like your life story on credit. That's what your history is. It's fairly easy to read and understand. Your credit score is a separate item. You're entitled to get access to your credit history for free. There's no cost for that, does not impact your credit score to access your credit history. However, your credit score is different, but related. Your credit score is essentially a numerical representation of your history. So what they do is they take your history and they mush it all together, they run it through a formula, and out pops a number. That number is your credit score. It ranges between 300 and 900. 300 is the bottom, you don't want to be there. 900 is the top, that's the area you want to move towards. The higher your credit score goes, the more likely you are to be accepted for a loan, the lower the interest rate they're likely to offer you, and the larger the dollar amount they're willing to make accessible to you. All right, so that works a little bit, but really, what goes into all this credit report, credit history? What type of information do they have on you, and how does this all come together? Well, let's start with what's in your credit report. First off, personal information. What do they know about you? Potentially, what they can know about you is name, age, birth date, social insurance number, passport, citizenship, driver's license, where you live, your home phone number, where you work, your job title, your cell phone number, your work phone number, how much you make every time your job title changes, every time your pay changes. They know your water bill, your gas bill, your electric bill. They know all about your insurance, your car insurance, your home insurance, liability insurance, personal insurance, fire insurance, every piece of credit you've applied for, been accepted on, every piece of credit you've applied for and been rejected on. Anyone out there got a gym membership? You don't have to answer that question, but you know what? If you got a gym membership, they know about your gym membership right down to the account number and how much you pay on a regular monthly basis. I mean, and I'm just uh, scratching the surface of what they know. I mean, people worry about CRA. Don't worry about CRA. Worry more about the credit bureaus because they know way more about you. The fact that they know all this information isn't the scary part. The scary part is that it can be all wrong. And those types of mistakes, we'll talk about that later on, can have very significant and sometimes devastating impacts to your life, your personal life, and your professional life, and your work and career options. The good news here is, though, you do have the right to access your credit history from the credit bureaus once a year for free. Accessing that information has no impact on your credit scores. We have two credit bureaus in Canada. One is called Equifax and TransUnion is the other one. These are private for-profit organizations. They are not government organizations. They are arguably very lightly regulated, so there are some concerns there. In order to get your personal information, you know what? I can forward some forms on to Vicky, which can be shared with you. Or you can go to Equifax and TransUnion directly. We don't traditionally recommend you approach them directly because these are private for-profit organizations. If you approach them directly, they will try and sell you a product, one that you typically really do not need. All you really need to do is access your credit history because your credit score is based on your credit history. That is why your credit history is actually more important than your credit score. Because if your history is wrong, your score is wrong. And we'll talk about some of the implications of that as we go a little bit further in. All right, what else do they know about you? What else is in this report? Well, hard hits. Hard hits are in there. What a hard hit is, oh, I've got a raised hand. Was there something you needed, Vicky?
I think you might probably get to it at some point, but will you share any kind of feedback around the commercials that we see all the time about check your credit history here?
Um, time constraints. I'll get
Okay.
into that briefly now, very, very briefly, because I'm under time constraints. You see things like Credit Karma say, hey, get hold of us and get your credit score. And they show you, hey, your credit score goes up and you can ditch the apartment you don't like. You get a better apartment. You can ditch your roommate. Now you get a nice dog. That's not how it works. You can make a gazillion dollars and have a terrible credit score. You can be making minimum wage and have an awesome credit score. The two of them are not related whatsoever, and we'll get into that a little bit further on when we talk about what impacts that. And also be aware that you do not have one credit score. There's two credit bureaus, so you have at least two credit scores. But guess what? You actually have at least 6 credit scores. I don't have time to get into all of them. The most critical one is called the Beacon score. This is the score that the lenders use when they make your lending decision. It is, if you want to call it, your true credit score. Um, the score you get from Equifax and TransUnion, from Credit Karma, from Borrowell, from all those other organizations, none of those are your Beacon scores. None of them are your true credit score. You will never know what your true credit score is. Lenders are contractually obligated not to share that information with you because that's the product that the credit bureaus sell to them. And if they gave that information away for free, it would devalue their product. So you will never know your true credit score. All those other scores out there, they can be good baselines, but I've seen discrepancies of 150 points between one credit score and another. So they're baselines at best. Great question, Vicky. Thanks for bringing that up. And anyone else, please throw those questions at us. All right, hard hits. That's another thing that they know in the credit reports. A hard hit is is when you apply for credit. Every time you apply for credit, your credit score goes down. Not a lot, nothing to worry about, typically 3 to 5 points, and typically you recover in about 3 months. So it's not a significant hit unless you apply for multiple pieces of credit within a relatively short period of time. So if, let's say, you get 3 credit cards within 6, 7 weeks, the credit bureaus don't look like that. You become what they call a credit seeker. They start to wonder, well, what's going on in your life? What's wrong? Why do you need so much credit all of a sudden? Think of your credit score, it's really a risk assessment tool. That's what it is. And if you apply for a lot of credit in a short period of time, you go into a higher risk category and boom, automatically your credit score goes down. Now, this can be significant because if you apply for multiple pieces of credit, let's say you picked up a couple of credit cards, they had some great deals, Canadian Tire, an extra 10% off, the Bay, an extra 15%, get our credit cards. Maybe you just picked up a line of credit. You got 3 pieces of credit within 6 weeks. Week 8, you're up for a mortgage renewal. You might get declined now because you applied for several pieces of credit within a short period of time, and that will cause a significant drop in your credit score. You might not be eligible for a mortgage renewal anymore. And that could have some devastating impacts. Or maybe you still qualify, but your credit score has dropped so much because of all the credit you've applied for, they're now going to charge you a higher interest rate, and that can cost you tens of thousands of dollars. It's important to understand how credit works. So if you can understand it, you can utilize it better. So we got a question now, I think, popping up from Daniel, and it's a really, really good question. And I was going to get to it, then I went, oh, I might not have time. So, but this is a good question. Basically, the question is, where is this information coming from? How do they get it? You give it to them. You give it to them for free, and then they repackage it and sell it. And you're going, oh, I didn't give them this information. I didn't give them permission for this. Yes, you did. When you filled out your gym membership application, as an example, in the fine print, nobody reads the fine print. You give them permission to run a background check. The background check includes a credit check. So when they run the credit check, all that information on your gym application form, poof, goes up to the credit bureaus. Whenever you sign any contractual obligation to make a payment over a period of time, buying an insurance policy, in the fine print, which nobody reads, you give them permission to run a credit check. So then, poof, all that information you just gave them because you're trying to get some liability insurance, that just went up to the credit bureaus. This is how all this information is collected by them. You give it to them, and quite often you don't even know you're giving it to them. All right, so what else is in there? Soft hits. Soft hits is everything that is not a hard hit. Remember, a hard hit is just when you apply for credit. So things like asking for your credit history, that's a soft hit. Soft hits have no impact on your credit score. Don't worry about them. Public records and consumer statements, those are handy if you lose a driver's license and things like that. You want to report it to the credit bureaus. Does not stop you from getting credit, but it does make it more difficult for anyone who may have stolen it or found it to take credit out in your name. So they're very useful tools in that way. Trade lines and credit ratings, well, that's the beginning process of where they take all that information you gave them and they start mushing it towards the credit score. So let's take a real quick look at that. What these credit ratings mean is every piece of credit you have where you make a payment, they rank each payment on each type of credit for every month from 0 to 1. 0 means it's brand new credit, you just got it, has no impact. 1, that means you just made your minimum monthly payment, at least, that you've met your contractual obligation to make that payment. That's all they care about. If you've doubled up your payment, if you've paid it in full and given them bonus money, doesn't matter. So long as you've met your contractual obligation, you get a 1, and that's all you get is just the 1. If you pay it late, even by a day, even by a minute, if you're doing it online, you get a 2. A 2 means that you're late, but you ended up paying it off within 30 days. Everybody gets a 2 now and then. Don't worry about it. It will bring your credit score down just a little bit, but you'll recover. It happens to all of us, myself included. It's like, oh, wow, I forgot my hydro payment this month. As you go further down the scale, the negative impact to your credit score increases. If you're ever late on making a payment and you get to be at the point where you're 180 days late, typically it will go to a collection agency. Sometimes that debt is sold to a collection agency. And that can be significant because if you're sold to a collection agency, you can see at the bottom here, that's ranked as a 9 where you go to collections. Getting a 9 is the equivalent of filing for bankruptcy in terms of the impact it has on your credit score. This is another reason why it's so important to check your credit history to make sure someone has not incorrectly coded you. Maybe you were a day late and you should have been a 2 and they incorrectly coded you as a 9. And as far as they're concerned, you just filed for bankruptcy. So again, very important to check your credit history. We've got 2 credit bureaus though, so you have to check it with both of them, not just with one, because they have different information from different sources and they have different formulas that generates their credit score. So you have to make sure they both have the correct information. All right, so who all is interested in this? Who wants your credit report? Who wants your credit score? Okay, well, lenders. That's an easy one, right? Lenders want that, so we're just going to park that, put it off to the side. It only makes sense lenders want to know about that. Landlords? Landlords? Why do you think landlords would want to know? And just to, I won't ask you guys to answer on that one because I want to stay within our time constraints here, but I want you to think about that. Why would a landlord want to know? Well, the answer is simple. Rent is a contractual obligation to make a payment, right? If poof, I just made all you guys landlords. Well, what's one of the things that comes to mind when you're looking at a new prospective tenant? You want to make sure they can make their rent. So let's say you got 2 people applying to rent a house from you, and they're equal in every way, and you just can't decide who you want to rent to. You really, really like them both, but you can't decide. So you know what? You're going to run a credit check on them. And you know what? They gave you permission to do that because when they filled out the application to rent in the fine print, which nobody reads, there's a line that says, hey, I gave you permission to run a credit check. So I'm going to run a credit check. You're going to run a credit check. Someone gets a 750, the other one gets 450. Okay, well, the closer you get to 900, the better. So you want the 750. That means they're more likely to make your payments. I mean, you really like the person who's got the 450. You really do. They're a nice person. They seem smart, sharp, focused, full of potential, but you can't take that risk, right? The 450 person, they're not as likely to make their rent. So you're going to take the 750 person every single time, and you might feel a little bad for the 450 person, but that's life. You got to run a business, right? So you can kind of understand why the 750 person is going to get picked there. So that makes some sense. Let's look at the next one though. Employers. Why would an employer want to do this? Why would they want a background check? So poof, I just made all you guys hiring managers for your favorite grocery store. Pick any one you want, and you're looking for a cashier. You got 2 applicants come in. They're equal in absolutely every single way. You can't decide between the 2 of them. So you're going to run a credit check. And guess what? They gave you permission to do that because a standard line in most job application forms is permission to run a credit check, a background check, which will include typically a criminal check and a credit check. So you're going to run a check. One comes in at 750, one comes in at 450. You really like them both. You really do. They both seem like great people. but you're going to pick the 750. And you might be thinking, well, why? What do I care? Well, right or wrong, the reasoning goes like this. That person with the 750, they're smart, they're sharp, they're focused, they're in charge, and they are in control of their lives. They're focused. I won't have any worries about them. Then that person with the 450, wow. I really like that person with the 450. I really do. They're smart, they're sharp, they're focused. They seem like such a good person, but wow, a 450. I mean, they're going to be so distracted. They're going to be stressing about their credit and all the money they owe. I mean, how do you get a credit score as that low as 450? I mean, they must have so much debt. How are they ever going to pay their bills? Oh my God, they're going to steal from me. Right or wrong, that is the thought process. And there is some logic behind that. You know, the average business will lose 3 days of productivity per person per month as a result of financial stress. So the lower the credit score, the more the financial stress, the higher the cost it takes to have that employee. So there is some reality behind that. It's not all perception. Um, okay, well, that kind of makes sense because we got money involved. So let's take money out of the equation. So poof, you all just became hiring managers now again, except now you're looking for someone to drive a forklift, or maybe someone to work in an office, or maybe someone to supervise some people. We're going to take money right out of the equation. And same questions. You get two people in front of you, equal in every way. You really, really, really like them. You just can't decide between the two of them. So you're going to run a background check because, yes, don't forget that's standard in most, application forms for employment. So you're going to run it and you get a 750 and a 450 again. You're going to, of course, want the 750 because it's the higher up they go, the perception is the more sharp, the more focused they are. You give them a task and they will get it done. You really like them both. You really like that person with the 450, but wow, a 450. They must be under so much stress. They're going to be calling in sick. The collection agencies will be calling them at work because yes, they can call them at work. It's perfectly legal. They're going to be distracted. Heck, they're going to drive that forklift right into the wall. No, 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 no. I really like the 450 person, but I'm going to hire the person who's got the credit score of 750. Right or wrong, that's the way it works. But let me ask you a question now. You don't have to answer this one back to me, just in your head. Pretend you're that person with the credit score of 450 and you don't understand why it is you never get the apartment, why you're always the second choice. Everything seemed to be going well. You seem to made a good impression. You really liked the landlord. They liked you, but you're always the second choice and you don't know why. You're the person applying for that job and you never get the job. You're always the second choice and you don't understand. You got the skills, you got the qualifications. The interview went really, really well and you don't understand what's happening. Well, let me give you a couple of possible scenarios here. One, you don't know you've got a credit score of 450 and you don't know the impact that that can have to your life. Two, and this happens far more than you would believe, your credit score isn't 450. Your credit score is maybe, I don't know, 825. You're actually better in the credit score than the person who's got the 750. You should have gotten that apartment every single time. You should have beaten out the 750. You should have gotten that job you wanted every single time. You should have beaten out the person who got the 750. But someone somewhere at one of the credit bureaus made a mistake. And that mistake caused your credit score to drop to 450. That can have some really significant, devastating, life altering impacts, right? Well, and maybe you don't believe what I'm saying. You might be thinking, well, really, why should I bother checking my credit report, my credit history? Well, let's start off with a recent survey in the US found that over 25% of the information that credit bureaus have on you is wrong. Of that 25%, 20% is critically wrong. What does critically wrong mean? No job, no house, no life, no prospects. It can be that significant. Well, you might be thinking that's a survey in the US. We're in Canada. We're much better, right? Well, unfortunately, not right. We use the exact same credit bureaus. Well, you still might be thinking, well, these are all what if scenarios and possibilities he's talking about. This stuff doesn't really happen. Yes, it does. So I'll give you three quick examples that I've run into in the last 8 years or so. Starting off with, it happened to me. Being in the industry, I'm very aware of everything that can go wrong, so I keep a very close eye on my credit history. I happen to be a landlord. I like to think one of the good ones. And one day I noticed my credit score dropped 150 points. That's a huge drop. So I did some digging. I found out that one of the credit bureaus was showing, just one of the bureaus was showing that I'd missed a mortgage payment on one of the properties. And I went, that can't be. So I went and checked my bank account. The money was there. It had always been sitting there, but for some reason the bank didn't pull the payment. So I called up the bank and I said, "Hey, what's wrong here? What happened?" And they said, "We have no idea why the payment didn't go through. We're so sorry." The mistake was about 3 weeks old when I spotted it. It took 3 months to fix it, even though everyone acknowledged the mistake. The bank fixed it. The money got pulled. They corrected the history with the credit bureaus. It took 3 months to fix. So you might be thinking, well, that's not a big deal. It got fixed. Okay, now I worked for Investors Group for 10 years. Like most employers, especially in the financial services industry, they have a minimum credit threshold. If your credit score drops below that threshold, they will not even talk to you. It's nicer than that, but that's really what it comes to. They will not consider you for employment. That threshold is 700 for a credit score. This mistake brought my credit score below 700. If I had applied for a job at Investors Group with that mistake in my credit history, I would not have gotten the interview. Bam, 10 years of work history wiped out. If I had applied for the job I currently have with Credit Counseling Society, they also have a threshold. I would have been dropped below that threshold. I've been here for almost 9 years. Bam, another 9 years wiped out because I would not have gotten the job I currently have. Those mistakes can be very, very significant. But if you pull your credit history once a year from both the credit bureaus, you can spot those mistakes before they have a chance to impact you. Okay, strong resume. That's a nurse who couldn't work for almost a year because of a mistake with the credit bureaus, right? She had no idea what was wrong. She came to one of our sessions. She had pulled her credit history because I had seen her previously about the importance of that. So she pulled them. She met up with me afterwards, showed them to me. One of the credit bureaus was perfect. They had everything correct. We looked at the second credit bureau. Everything was wrong except for their name. They had made the most common mistake that the credit bureaus make. They had cross-referenced her file with another woman with the same name. So now you're the hiring manager looking for a nurse. She applies, the interview goes great. You now run a credit check on her because you gave her permission in the application form that no one ever reads the fine print on. Pull the first credit history, everything's great. Put it off to the side. Pull the second credit history. Wow, this is a mess, right? Everything is wrong here. Wow, I mean, what's going on here? Has she stolen the identity of a nurse? Has someone tried to steal her identity? Is she just trying to get access to the drugs? And that has happened. Well, you're the hiring manager. You're responsible for these decisions. You have a liability. You don't have time to sort out this mess or to find out what's going on with her life. You crumple it up, throw it in the garbage, and you pull the next one from the pile. Within 3 weeks of us spotting this mistake and fixing it, she got a job. But she was unemployable for almost a year because of that mistake. Vicky, you've come on. Are you warning me I'm running out of time?
First of all, I'm warning you, but I also want to say that one of your guests would like to know what are the two credit bureaus that you referenced earlier. I know one was the Beacon Score, but I wasn't sure
Yeah,
what the
that's
two
the
credit bureaus.
correct. That's the score. The credit bureaus are Equifax, EQIFAX, and TransUnion. Those are the two credit bureaus. It's very important that you pull the your credit history from both of them. So
And
thanks for the
yes,
question. Yep.
you have about 4 minutes.
Okay. This is probably my last key slide. The next one are just a couple of conclusion slides, so we can bypass them. But I will send you the complete deck. So if the deck is accessible to people, then they can see the couple of slides that I just didn't get to because they're just conclusion slides. The scariest one I have is the one I'm going to leave for the end here, and that is I am going credit free. And Vicky, this is where I might need that extra minute I told you I might need back. This is a story of about a 67-year-old lady. She had at one time a credit score of, I think it was 760, and she was retired, fixed income pensioner, 67-year-old widower, living on her own. And she decided to go credit free. What that meant to her, she paid off all her credit cards, she canceled them. Perfectly fine, nothing wrong with doing that. Though canceling your credit cards will bring down your credit score a bit. And then she moved away and she didn't tell the credit card companies where she moved to. Why bother? She paid off her credit cards. 4 years later, and this is how long it can take some mistakes to show up, she went to renew her mortgage. She went to her bank where she'd been at for 30 odd years, and they said, sorry, we can't renew you. Your credit score is too low. She says, what do you mean? It should be 760. I haven't done anything to impact it in the last 4 years. And they say, no, you're too low. We can't help you. And so she keeps after them and after them. And finally, they tell her something they shouldn't have. Legally, they should not have shared this. They didn't tell her beacon score, but they alluded to where it was at. And they said, listen, your score is below 600. We cannot touch you. And usually 600 to 680 is the minimum threshold for a mortgage. They said, we can't touch you. And she said, oh, that's impossible. They wouldn't loan to her. She went to bank to bank to bank to credit union to high risk lenders. Nobody would touch her. But someone did also broke the rules and said, listen, your credit score is actually in the 400s. Nobody will touch you for a mortgage when it's that low. And so she tried and tried and tried. She was 2 weeks away from being evicted from her home. The bank was going to foreclose because if you can't renew, you got to pay up, right? And she couldn't afford to pay it off. So they were going to foreclose and evict her. She was 2 weeks away from becoming homeless. She came to see us with a sort of a what the heck have I got to lose? Let's see what these people can do for us. So the first thing we did is we pulled her credit history, something she could have done for herself. We're happy to do it for her. We went through it line by line by line by line, and then we saw it. When she thought she had paid off her credit card, she had made a mistake. You would seriously want to laugh at how small this mistake was if it wasn't for the fact that this woman was about to become homeless because of a 7-cent mistake. What had happened was she hadn't paid off one of her credit cards in full. She had underpaid one of them by 7 cents because she had canceled her card and moved and didn't tell the credit card companies where she moved to. They kept sending her statements to her old address. She never got it. She racked up 48 consecutive missed payments. The credit bureaus don't care about the dollar amount. All they want to see is, do you owe money and are you paying your bill in time? So after 48 consecutive missed payments, her credit score had actually crashed to 435. Nobody would touch her. So she came to see us. We spotted the mistake. The first thing we said is, we got to pay off this bill. So she paid it off. It was like 23 cents with interest by that point in time. But all that did was take out the debt. Her credit score is still 435. She was still going to get kicked out of her house. Then we went back and did the one thing that a lot of people don't think to do. We said, listen, can you reverse the last 4 years as if those missed payments never happened? And the credit card company could have said no. They said, hey, this is what happened. This is the reality. It is what it is. Fortunately, they went, oh my God, we can see what happened here. She's been a great customer. This is such a silly mistake. Of course, we can fix that. They reversed the last 48 missed payments. Boom, her credit score went back up into the 700s, and everybody wanted to give her a mortgage. Think of the stress this woman was under. 67-year-old widower on her own, fixed income, a pensioner, about to become homeless because of a 7-cent mistake. If she had pulled her credit history from both of the bureaus at least once a year, that mistake would have been no more than 12 months old. She could have easily fixed it, and she would have never have gone through this. With that, I am going to wrap up. I can stay on for a couple more minutes unless Vicky gives me heck for staying on and running over to answer any questions that you may have. If not, keep in mind I will be sending the slide deck out to Vicky, and hopefully they can share it with you, as well as my email address. If there's any questions that you wanted to ask but didn't feel comfortable in a public forum, by all means, send them to me. I'll be more than happy to respond to them as best I'm able. And with that, I am going to turn it back over to you, Vicky.
Thank you so much, Tim. That was very provocative. You got me thinking about a few things. Yes. Lots of thank yous in the chat. I'm just going to pause for a moment and just ask, is there any last questions for Tim? We have about a minute or so.
Everyone is very welcome. And keep in mind, this is the short version.
Mm-hmm. All right. Well, just cognizant of time, I'm just going to, again, thank you very much, Tim, for the informative and thought-provoking presentation today. And thank you, everybody, all of our participants for joining us today and for participating. I know Tim would have liked you to have participated more, but some of you did participate, and we really appreciate it. I just want to point out that there are some upcoming alumni webinars. So watch for a new webinar series beginning October 24th, Tuesdays with TD. It includes a variety of topics to help with financial situations along the lifespan, including buying a new home, building wealth, and preparing for retirement. You can expect an email invitation in the next few weeks. So one final thing before we sign off, I just want to point out that homecoming is in full swing. We have a full slate of programming. Really, there's something for everyone. One event that is a lot of fun is the Bison Game on Saturday at 2 p.m. And because you're alumni, you can feel free to attend and get your tickets. You can register right away by going to the University of Manitoba's Community Alumni Homecoming page. And with that, I do believe we are complete for the evening. So thank you again, everybody.
Everyone have a great night. Goodbye, all.